Hello investors, I'm Stuart Kruse and welcome to Kruse Asset Management's Fitness Friday. We're going to change up the format a little bit and we're going to talk about the fitness of your portfolio and how it's paralleled and analogous to the fitness of your life. Okay, and so every week on Friday we're going to talk a little bit more about how to make your portfolio more fit. So right now, week one, we're going to start off with the basics. And everybody knows the basics of a fit portfolio is diversification. And it's the same thing for you as a fitness of a person. So what does diversification mean? It means don't putting all your eggs in one basket. It means having a balanced portfolio. So we want equities. We want bonds. We want alternatives, which are not equities or stocks and bonds. There's something different like gold, perhaps, or real estate. Things that do not move in lockstep with the market. And so how does that translate to diversification within your fitness? Well, let's talk about your diet. And with your diet, you need proteins, you need carbs, you need starches, you need fats, you need healthy fats. But again, to draw this parallel, if somebody came to me and said, I am a very conservative investor, I want to take the lowest risk possible, that does not mean cut out all of your equities and alternatives. It means get the right equities and the right size alternatives. Maybe you're not going to invest in the most risky equities, but you do need to have some equities because that is the lowest risk profile. Up on the board here, I've got a spreadsheet that shows you a conservative portfolio, an aggressive portfolio, moderate portfolio, and the least aggressive, the most conservative, actually has 20% equities. It's been shown through Nobel Prize winning research that the lowest risk portfolio has 20% equities because all bonds has some risk with it. You will lose purchasing power, you have interest rate risk, so the equities and the alternatives actually offset that risk. If I show you this, this yield curve here, this 100% bonds, this is standard deviation going out to the right and expected return going up. So standard deviation is a proxy for risk. So the more risky, the more to the right. And obviously expected return, we want more. So if you were sitting right here on this dot, there would be a way for you to move up and to the left. So less risky and more returns. That's what adding equities to your portfolio does. If you're at 100% bonds, you're here, adding some other asset classes actually makes your portfolio less risky with more returns. So your least risky profile is right here at this tangent. And then after a while, you continue to add more risky assets, then you also get more risk and more returns. But initially, the most risk or the least risky asset has some equities in it. So similarly to your diet, if you are going on a diet, you don't want to cut out all of your carbs or cut out all of your fat. You need those things. And you also want it to be a lifestyle change. You want it to be sustainable because you don't actually want it to be a diet. You want it to be something that you can live with. So not living with any carbs for the rest of your life doesn't make any sense. So you make adjustments so that it is diversified and balanced, just like your portfolio. Other ways to get balance. So in your body, we talked about your diet. Let's talk about your workouts. If you're a person that does nothing but cardio, then you need some strength training in there. If you can't do a push-up, do a push-up on your knees. If you can't do a push-up on your knees, do one against the wall at an angle. But start somewhere because you need resistance training. The more muscle you have, the more fat you will burn over time. Okay? It's not just cardio. Running actually is not the greatest way to reduce your calories. Now, if you run a lot, you will reduce your calories. But think about it. When you're actually running, your body is trying to do the best it can to minimize its activity, to become as efficient as possible. So as you're running, you are doing everything subconsciously to exert the least amount of effort, right? So what you also want to mix in there are sprints or some high intensity interval training because your body acts less efficiently, in which case it will burn more calories. So you want to add weight training, some other alternative training besides just cardio, either like besides the Stairmaster or running. You want to add interval training or intensity training where your body doesn't act as efficiently and you're building muscle. Now, bringing that to the portfolio side, You also want to have diversification across strategies. So not only do we want stocks, bonds, and alternatives, but when we're buying stocks, maybe we buy individual stocks. Maybe we buy large, mid, and small cap stocks. Most portfolios in the United States are comprised 85 to 90% of United States stocks. You want to have diversification into the international arena. And perhaps if you have a bias for technology, let's say you just like Apple and Netflix and the FANG stocks because they've been working, well, I've got some news for you. This has happened before where technology has worked for years and then for decades, value outperformed. So if you have a technology bias, then you probably need another strategy to help balance you out and be thankful that what you did worked while it did, but over the next decade, history has shown we have a reversion to the mean. So you need diversification across strategies as well, value versus growth. Okay? So that was your first Fitness Friday from Stuart Kruse and Kruse Asset Management. And stay tuned for the next week on our Fitness Friday. And don't forget to invest with the odds in your favor.